Good morning from Chicago, traders. It's 8:03 a.m. Chicago time on the 17th of February, Wednesday. This is episode number 1939. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we have a market that is mildly risk off, except the flush that just took place here a few minutes ago at 7:51 or so, 7:50 Central, 8:50 Eastern, about 10 minutes ago. Looking at the Convergent Trading pre-market summary sheet, we see that allocations are coming out of equities, but also out of metals. And the dollar is seeing a rise up 41 cents. Currently, gold is off, taking even a bigger hit than it did yesterday. Gold in the pit session gap down yesterday. It's traded at 17. It's trading at 17.76 and 70 cents, down $22.30. Quite a move, down 1.23%. Silver holding steady in the $27 handle, holding at 27.09, down 23.5 cents or 0.86%. The euro's off, the cable's off, the yen is off, and the dollar is stronger. The only thing that's up on my quote board is crude oil up 71 cents, trading at 60.76, up 1.18%. The dollar is up 47.5 cents currently, and the bonds are up 7 cents. Allocation is to safety this morning. The headline is that Democrats are cracking down on big tech, both in their monopolistic behavior and also their responsibility for misinformation, the propagation of misinformation, and so on. There's some nervousness in the market, and we talked about this. There's some technical reasons why the market is expected to fall or rotate down. We talked about this yesterday. The primary expectation was a push down into 39.20 yesterday, which we got after gyrating for a while. But the U.S. stock index futures fell as investors refrained from making big bets ahead of monthly retail sales data, minutes from the U.S. Federal Reserve's January meeting due later in the day. Of course, that's probably not the reason this is happening. But you got to find a why, an answer to the question why, otherwise it's not very useful. This is coming from Reuters, from Refinitiv, but that's where we stand this morning. Currently, the S&P is traded quite a bit, 260,000 contracts, 260,000 contracts. Pretty much all of the inventory is short at this point. We did trade a little bit above the prior close. So the overnight inventory is about negative. Let's see what it is now, 15 minutes later. Negative 85.5%. So 85.5% short. The range has expanded a fair bit with this push of the low. Currently, the range is 39.1075 to 39.3225, giving us about 21.5 points, which is actually quite normal for this volatility. The profile was balanced, and now it's extending to the downside. Overall, it is balancing out. Remember, yesterday we said if we start to move into or below a certain level, when we start to move into the prior range, which was at 39.35, once we get down there and we hold steady there, we are very, very likely to test which price? You got it, 39.09. That's the MC point of control and the big magnet in the area, and we're well on our way there. So that's what we have today. Rotations have been falling a little bit. Volatility is falling. And overall, the market's getting into this kind of rally groove. So hopefully, for our sake, we get an interruption, a little scare here and there to kind of keep all those investors on edge and moving their money in and out. So that's where we stand this morning. Let's take a look at what was expected yesterday versus what we got. Yesterday, so this is an image of yesterday. That's not me in the corner live. That's me yesterday. Yesterday, the primary scenario, given the narrative that I had shared with you, the primary scenario is a push down. You see it there in the arrow. A push down, consolidation there at the prior day's range, a squeeze into the 26, 27, and then ultimately a trip down to the 20. That's the primary scenario before we get a bounce. Okay, so a slight push up, an impulse down or a slip down into 26, 27, and then I expect it to work its way down towards 20. Here's what actually happened yesterday. Open auction out of range. Open auction out of range, so two-way auction balanced. We hit 44.75 right off the open. We hit 45 even, 44.75 again. And we hit 45. If you're a Convergent member, I highly recommend you listen to yesterday's Trade Talk session that we had at noon Central, 1 Eastern. Tendex and I came on and talked about the action. And we had a lot of liquidity here at the 45, big iceberg that, so we had a triple top, a very weak high, but the market could not hold up here, and it started to work its way into the prior range. This green line is the prior high. Gosh, there's so much going on in these news feeds. Yikes. Just constant talking. We kept, at first we dipped into the range and we had an impulse up, 13.5 points. So the expectation is a small pullback, consolidation in the VWAP mid OS low area for a continuation higher. That's what was expected yesterday to the 50 and then the 57, if you recall. And what it did is it had an impulse up, again, 13.5 points, and then it took it all back and went deeper into the prior range, came back to the mid, consolidated inside of the range, and then that opened up the push towards the 39.20 for us. So we did bounce off the 27, 26 area right here, retest 27, 26 area, and then we ultimately went to 20 and then bounced back up, and that was the expectation. So yesterday, again, open auction, push up, look for a squeeze down, that gives you the arrow, look for a consolidation in the 25, 26 area, and then ultimately push to 20. This is what I put on the chart, and then consolidate and move back up. We built a double distribution profile with a weak high. This is marked on my master levels. There it is. It says weak high in this mess here. Let's see if we can clean that up. See that? It says weak high, new all-time high, plus weak high at the price there at on the master levels. This is an area that we want to keep track of, and we built a point of control in the high volume node left behind on Friday. You can see it's the same price here, holding steady. Overall, seeing the market is getting weak as it pushes higher. The delta was negative yesterday, stayed negative most of the session. Stayed negative most of the session, and that feeds into the idea that we went into the prior range and we couldn't get back out of the prior range and attack this 45. So my expectation, once the 20 was hit down here yesterday, my expectation is consolidate, build a base, move the point of control lower, and then start to squeeze the shorts as we always do back to the 45. And this time, after a triple top and a weak high, the 45 is expected to have a ton of buying fuel, so that what we would expect is as soon as this 45 is breached, we'd see the 50 right away. And the idea is to let it squeeze higher, buy the pullback, wait for the consolidation, have a lot to lean against in terms of zippers and volume and everything else, and hang steady into 49.50 or so. That did not happen. It ended up being a very much a non-event into the close yesterday, even though, you know, market on close imbalances of 1 billion plus, 1 billion to buy. I still, you know, I know I'm being critical here, but I still don't see how the correlation with the market on close imbalances versus the close. I just think it's, from what I'm seeing, it's extremely random. I find it not very, very useful. So maybe someone can teach me better how to use that number. But overall, it just didn't go anywhere. A billion imbalance on the buy side is quite a bit, yet it's still kind of drooped down. So the overnight session, with it closing below the point of control, extending on a normal variation day to the downside, closing below the IB, the expectation is we would start to move down. The target then becomes 39.17 and a quarter overnight, and the big target is 39.09. Okay. So let's step back for a minute. That's yesterday's action. Let's carry that into today. Let's turn off everything here. Here's today. So we close, that's the pit session is the shaded area. We close down here, that's the closing price. We reopen, test up, and then immediately push lower right into the 39.14. And then we start to climb up as the Asians come in, the Asian session comes in. We start to climb up, and what we end up doing in the overnight session is putting in yet another week high in the overnight session, week high on the overnight session, right up against the prior day's mid, and just holding steady. Europe opens, Europe sells off right away. We sell off, clearly a release here, sell off, push back up to that high, go sideways, and then just recently in the last half hour or so, we ended up flushing to the downside through the 39.20, and we're making our way down into 39.09, and we've hit 39.09. We got to 39.07 just now in what looks like a pretty good selling on pretty decent delta to the downside. So today looks like a pretty decent day to sell pops. Except that has not worked very well over the last months or so, maybe year. We need to pay close attention to how it's responding. We're opening in a gap down, so look at it here. Okay, we have established a low, one-time framing up triggered, one-time framing up working on Friday, one-time framing up Tuesday, and we've breached a one-time framing up by taking out this 39.1875, and that's why, again, yesterday, as I told you, I'm expecting this thing to top out and move back to 39.09. That's the primary scenario. Was after that, was looking for the 20. And we got that, and here I'm looking forward to for it's opening in a gap down right on top of this high kurtosis, low range value area from the prior week. Complete balance here at 39.09 with a 3900 century figure below it. This is area of turbulence here, expecting it to chop around. In either case, we put in new highs, so we're coming off, and the most likely scenario is it responds back up and attempts to hold yesterday's range is the key scenario that's expected. I expect the first test of this 39.09 from above to hold and push us back up. We'll see how it does today. If it does not, if it's not able to become responsive, then we're looking for it to push back down into the 38.90, 38.88, and then beyond there, it is likely to go down into the prior week's low at 78.25, and that ends the one-time framing on the weekly. So 78 is going to be important here if we fall. If we do continue to fall, then we're looking at 38.50 quite quick, right? The prior high, 38.62. And then we have this important 38.48 area. Very important. 38.48. This is the balance, 38.48, 38.45. If you recall from couple weeks ago, this becomes the next big magnet. So if it's not able to hold to 09 and starts pushing to 78, then all you swing traders out there might want to keep an eye on the 48.45. We start to push into the 20 SMA, which is at 43, a little bit of confluence, and then beyond there, we get to 38.30. That's how the auction is expected to go. So open, if we're not able to be responsive, then we are likely to chop into 39.09. If not, then we're looking for it to push into the 88.87 area, 78, 62, and then 45.48. That's the sequence of events that are likely to precipitate as a result of it failing to come back up above the 32 and out of last week's range at 35. Do you understand the narrative? That is the narrative. Based on that, one can more confidently, in my opinion, put on and manage trades. Here we are. This is what we did last night. 296, that number, that fuzz of a number there. 296,000 contracts traded, relatively heavy volume in the overnight session. The delta is negative. We are below the prior day's close. Overnight inventory is short now, creeping up above 85% short. We're in the 30 minutes one-time framing down. And so we want to, I'm interested in selling pops this morning unless it pushes back up into that 39.32 area. I'm more interested in selling the retracements, especially once the overnight inventory gets balanced. So I'm looking for a pop higher and then continuation down this morning. So that's what we have. So let's take a look at what's expected for today. Let's set this chart up. A lot going on in this area. Please keep the daily chart, the daily composite chart in mind. Very important to be aware of the overall narrative so that when you put on a trade, you have the confidence to sit through it. This morning, opening in the 39.09 area, turbulent area, expecting some turbulence here. I'm looking for responsive buying. Consolidate here at the 13 and potentially push all the way back to the 20. Test the 20, looking for a rounded top failure, looking for it to come back off, get back into the 39 and potentially push below it to 03, 3900 before the bounce. Let's keep our expectations tempered. What I was talking about on a daily is not just today. That's several sessions worth of play. But I'm going to be watching this push higher I'm going to be watching this very closely to see the quality of the lifting that takes place. I'm looking for failure somewhere, 39.20 being the key failure price that I'm after. There's a lot that goes on at that price. 39.20, I'm looking for failure there, and I'm looking for a structured short back down to 39.09. Again, more turbulence, more chop, more turbulence, more chop in this MC point of control. Remember, we closed at 39.09 4 out of 5 days last week. So guess what? Even if it gives it up and gets below the 39.09, I'm looking for those buyers to come back in and drive it back to 39.09 to close at the 09 again. Why should my expectations be any different than what it has already shown? That is the primary scenario. We're opening in a gap down, but we're gapping into balance. We're gapping into balance. That's not the same as gapping into new all-time highs. The secondary open, chop, again, 39.09. Glide down, start moving towards 39.03, consolidate here for a bit, push 3900, get below 3900 to 38.97 or so, consolidate, come back up 39.09, come back and take out the high, move towards the prior day's range and hold steady here. This is likely to be a breather once it tests both sides, and where we close today is likely to determine how things are likely to play out over the next couple of sessions. These are the key scenarios for the day. Anything can happen. Trade your plan and manage your risk. Manage your risk first so that you can be here tomorrow and the day after and the day after. Okay, does that make sense? You come here to hear the story, that's the story, and to make your plans based on the story. The market is singing. It's singing every day. It's singing to us. It's telling us what the narrative is, and all we have to do is figure out for ourselves in our time frame, and that's very important, figure out for ourselves how we can align ourselves with that singing, right? We're just a violinist in an orchestra. We just take a seat, figure out where we are, and then play our instrument without disrupting the flow and the process. That's what we do every day. Good luck.